Good afternoon, traders. Happy Wednesday. This is Jefferson Fossey here with Walsh Trading. It is Wednesday, November 12th. It is 3:15 here in the afternoon. Welcome to my midweek commodity outlook here. Going to go through all the markets that I watch, give you guys a look at the charts and what I see in the patterns here, and kind of hopefully explain a little bit of why I do what I do. Please keep in mind that futures trading does involve substantial amounts of risk. Certainly not suitable for all investors, traders, or producers. Well, let's dive right in here and take a look and start off with the markets here and see what happened here today and what might happen here later on this week and moving forward. Starting off like we always do here with the December live cattle here, down $1.92 today, closed at 225.27. Lower lows, lower highs relative to Tuesday's trade, but we're still well within that big bullish engulfment range that we had here on Monday. To my eye, Monday's trade was pretty supportive here. I think that can serve to change the sentiment here in the market a little bit. We've just not gotten any real follow through from it. I think it's interesting, and this is going to come up in a few of the markets that I cover here today, but the 38% retracement, the Fibonacci numbers from the contract lows to the contract highs, they held as support here last week and earlier this week. So I think that's relatively supportive. There is going to be some resistance. You've got the 100-day moving average in December Fats right around that 230 area. 230.01 is where that number is today. That's going to offer us a little bit of resistance. That had been very, very strong support going all the way back through the life of this contract. Every time it got through there by a little bit, came rallying right back up. Got to wait and get back up above it here, but I think in the long run we're still going to be bullish cattle. I still think we've got less cattle and more people to feed. We'll get a cattle on feed report next Friday, the 21st. Hopefully that'll give us a little bit of insight into that here as well. The February contract also held that 38% retracement, also bounced up. Resistance is a little bit higher. That's at 230.71, and the February contract today finished down $1.42 at 224.97. So that still needs a little bit of help to get through that resistance. And beyond that, you've got overhead gaps to the low here on October 24th, to the low on October 23rd, and the low from the contract high day here on October 16th. Those gaps are going to offer a little bit of resistance as well. But if we clear up above that 100-day moving average, they may not slow the market down very much. Looking at January feeders, November's still out there. It was up $1.35 today, and it actually stayed positive here for most of the day and finished that way. Certainly the rest of the feeder contracts were lower here. January's got the advantage here as far as volume and open interest. I put a little trend line here on this chart just across the highs. Nothing fancy, nothing real specific, just connected the contract high with the high we had here last Tuesday, a week ago Tuesday. We cleared up above that here with a nice big limit up day here on Monday. We did have a higher day yesterday. They finished up at 32, but not aggressively so. Today they were down a little bit, down about $1.67. Holding 5-day moving average support, closing right around the 10-day. That's at 327.24. So we did close just above that 10-day moving average support. I think we've cleared this trend line resistance here, but we got to get up above that 100-day average here in January feeders. That's at 336.44. Same thing with feeders that we got in fats. There's 3 overhead gaps that we'll have to deal with here on the way back up. But I still think we got less cattle. I still think we got more people to feed. And in the long run, still feel like the cattle market's going to be bullish for the next year or so. That's in my estimation anyway. That's what I think. Looking over here toward lean hogs, Deese is still out there, but February's got the advantage as far as open interest right now. It'll come around in the volume market, roll over here as well. Seeing the same thing in the cattle markets too. Deese has still got the advantage here from volume side, but the open interest is quickly shifting out to the February contracts there. So February lean hogs had a real nice start to the week here. Big jump up, 347 higher on Monday. Another 40 cents higher here yesterday, Tuesday, but ran into resistance at that 200-day moving average. Didn't even make an attempt to get through it here today, and they just dropped the market $1.70, closing at 81.52 on the February hogs. You do have a little bit of short-term average support. The 5 days just underneath today's close here. That's at 81.35. The 10 days probably right around that 81.54, 55 area. So we did close slightly below that. Trend has been down here in lean hogs. Well, pretty much the whole month of October until now. 2 days up does not change the trend. Keep an eye on the 5 and 10 day moving averages. They are getting a little bit closer together. They have not made a bullish cross yet, and maybe that 200-day average is too heavy resistance for the hog market to get through here just yet. Flipping over toward the grain markets here, we've got December corn was up 3 1/4 here today, closing 435 1/4, matching the high close that we had here a week ago on Thursday, November 6th. That puts the market at the highest level really we've been at since July 3rd. It's been staying right up here. Now the short-term averages did kind of flip to the sell side here on Monday, but we've really been sideways here for the last 2 weeks or so. I think the market's really anticipating this delayed WASDE report. Early estimates that I've seen have corn production right around 16.5 billion bushels. That's still going to be a record, but that's down from the 16.8 that they had the WASDE pegged in September. Corn yield, I would expect them to pull that back a little bit as well. With the last September report, we were at 186.7 average yield. I think that's going to be about 184. Could be quite bullish. Now the ethanol production or consumption numbers that we saw here last week, that was a record consumption here for the month of October. That is bullish corn. 200-day moving average is just above the market here, 435 3/4. We've been working higher here all week. 2.5 cents higher on Monday, 2 1/4 here on Tuesday. Today adding another 3 1/4. Even though the short-term averages are on the bearish side technically here for the moment, I think we might end up breaking up higher, possibly pushing this market here in Dece up to about 440, maybe even 450 or so. You've also got rollover going on, so we should be paying more attention probably to the March contract here if we're going to put any positions on. The resistance there is at 450 3/4. Today's close at 449 1/4. Does not quite equal. We had 449 1/2 here on November 5th, but regardless, we've been at these same high prices. The market's not selling off a whole lot, staying fairly strong. We had really good trading volume here today on the March, and I do think the market wants to break through that 50-day or that 200-day moving average, get up above 450, probably trade up toward that 460 level or so. Looking over here toward the soybean market, January beans today up 6.5 cents, 11.33 3/4. Best close that we've had here since last Wednesday. That day we closed 11.34 1/4. Staying really high here the last week and a half or so, staying at these high levels and expecting probably a bullish breakout here to the upside. The WASDE estimates for that, soybean production pegged at 4.27 billion bushels. That's down just slightly. We were at 4.3 billion bushels here with the USDA in September. The average yield, I think, is going to be right around 53 bushels an acre versus 53.5. So a slight reduction in the soybean numbers here as well, but I think the market's just waiting for more bullish confirmation out of this. One thing that I know has come across my desk in the last couple of days about soybeans is that people are a little bit disappointed, or they want more bang for their buck out of any Chinese purchases. We haven't seen any more. Our prices are still a little bit higher than they are in South America, so they've reverted back to buying cargoes from Brazil and Argentina here over the last week or so. But we do have agreements with them that they're going to buy 12 to 14 million metric tons from us here by the end of this marketing year, and 25 metric tons here over the next 2 or 3 years as well. So that should be helpful. We just gotta wait and see how the market reacts to Friday's WASDE here. Everything looks bullish. Everything's still pointing higher. 5 and 10-day moving averages, because we've been sideways for the last 8 to 10 days, they're getting very close to making a bearish crossover here, but they haven't done that yet. Stochastic's pointing toward higher prices, as is MACD, although that ratio is starting to decline a little bit. as you can see by the lighter green down here. Still like beans from the long side. Still think they got decent upside potential. I've seen a lot of articles and a lot of people talking about how the fact that beans don't generally like to stay in the $11 range. They either want to be 12 bucks or higher, or 11 bucks or lower. We're still on the low end of that, but I think they really do want to push up and head up toward that $12 mark in my estimation. December soy meal here today, $4.10 higher, $3.21 even is where we closed. Best close we've had also since last Wednesday of last week. Big sell-off here last Thursday, but 5 and 10-day moving average support is held, pushing the market right back up and reigniting the bullish move here perhaps today. Now my short-term averages, they're tough to see right there, but that little white that's sticking out from either side, that is a bearish crossover here. Not necessarily certain I'd take a sell signal in any of these right now. Probably use a sell stop if you want to get short. Make sure the market's setting new lows here from the past 3 days before you do. Same thing here with the corn as well. Make sure we're heading lower before you sell into that. I do think the market wants to break higher, but it's awfully overbought, and it has been here for about a month almost now. Stochastics at a fairly high level here, both of them up over 80% right now, 87 and 83 respectively here today. Market's a bit overbought, is in need of a pullback here, but I do like meal here still from the long side. January soy meal, excuse me. There's December bean oil. We'll look at the January contract because rollover is going on there here as well. Same thing in the soy meal here from the December contract. We are going to roll to the January. We're seeing that now. DISA's still got the advantage as far as volume trade, but open interest is definitely switching out to the next month contract, which would be January in both meal and in bean oil. Now, short-term averages here in bean oil. January contract flipped over to the buy side here on Monday. Nice little bullish crossover there. We're up 90 cents that day. Added 52 here yesterday. Closed up above the 50-day moving average for the first time since, well, August 22nd. Or the 25th, depending on which day you want to look at. Now, when we broke up there before, now we only stayed up there for a couple of days. Closed up above it here on August 22nd. Still up above it on August 25th, but on Tuesday the 26th, they were right back underneath that 50-day. They're flirting with it here again today, and we did go lower, down about 47, but I do like this market from the long side. I think your risk is probably down to maybe Friday's low, or perhaps if you want to keep it a little bit tighter, maybe the low here of Monday, which was 49.90. But I do think bean oil wants to turn itself higher here a little bit. And especially if soy meal starts to weaken, bean oil will rally, in my experience anyway. Flipping over to the wheat market here. This is March wheat here for Chicago. Short-term averages also flipping over to the sell side there. Same thing. Not sure I'd want to follow this one just blindly just yet. Maybe have a sell stop below today's low, or just make sure you're selling into weakness here. But short-term averages are rolling over here a little bit. We made contract lows in the middle of October here on the 14th. Had a very nice rally up here to set new highs here for the move last Wednesday. And if I put a little Fibonacci retracement on there from those lows to that highs, well, look where we're at, right around this 38% retracement still. That was support here Friday, Monday of this week. We went through it here today, but bounced right back up above it. Finished a touch higher, 3/4 cent higher in March Chicago wheat. That market does, well, it's trying to rally. I don't want to say it's getting full on bullish yet because, well, the long-term trend in wheat has been horribly down here for the last couple of years. But it's showing some signs of bullish life and may be ready to work its way up. The only changes that I would expect here in the WASDE report here is going to be on ending stocks here for wheat. Domestic ending stocks are expected to be right around 869 million bushels, which is up from the 844 million that we had with the September WASDE. World wheat stocks might be in the 265, 266 million metric ton range, and that's up just a little bit from the 264 million that we were at in September. So might be getting a little bit of a bullish push, but there's a lot of wheat out there here in the world. KC wheat's kind of doing the same thing, 2.5 cents higher here today, 541 and 3/4, closing right back up. Yesterday was a little bit of an equilibrium day. They did push lower here today, got down to what, 532 and a quarter, but finishing almost 10 cents off the lows. I think that's a nice strong bullish push for it. Same commentary here. I'd rather have a sell stop underneath the market. If it's going to get weak, it's going to go a lot lower. I think still we'll get under that $5, but for the upside, I do think the market does want to try to bounce higher. Got to get through that 100-day moving average here as well. That's at 542 and 7/8 today. We finished, what, 541 and 3/4, so we're not really far away from it. Wouldn't take much to get back up above there. I've also been watching these wheat spreads here between KC and Chicago, being long KC wheat and short Chicago wheat. I think those spreads typically they tend to go higher this time of year, and I do like those from the long side here as well. In fact, on that chart, flipping over to the buy side with the short-term 5 and 10-day moving averages here today as well. So grains are showing some bullish strength. I think it's all going to come down to whatever the WASDE says here on Friday. I know that there's a lot of pent-up curiosity, I would say, because we haven't had any real government reports here for the last month and a half or so, so people are missing some information, and Friday could be a pretty explosive day up or down for the grain markets. Same thing here with cotton. We'll get a little push out of that, but cotton's getting weak here. Short-term averages turned bearish last Thursday on the 6th. Market's been working its way down. This is a contract low close here for March cotton. Not looking very friendly. 64.82, down 56 here on the day. Low close. We did not violate the actual low print, which was 64.45 here on October 14th. Today's low is 64.57, so they got within shouting distance of it, but couldn't quite push it there. Finished a little bit off the lows. I think people might be hoping for or expecting a bullish surprise for the cotton market here on the WASDE. I'm not sure we're going to get it. I don't have any estimates for production or for carry out for that market here currently. 50-day moving average has been very strong resistance, most recently hit here the end of October, and we've been working our way down here ever since. The long-term trend on cotton has also been for lower prices. It's been kind of stagnant, been kind of sideways, but still keeps leaching lower here over the past year or so. Breaking the new lows here in October, retesting those lows here again this month. Yeah, I think prices might want to keep heading down here for cotton for a while. Looking at March sugar, 14.57 here today. Best close we've had in sugar here. Got to go back to November 3rd. So this is the best close here we've had since the first trading day of the month. Short-term averages are still on the bearish side, and they've been that way since October 13th. But we have been kind of basing, I think that's what I'll call this activity, consolidating, kind of basing here in sugar pretty much since, well, 27th, 28th of October. We did have a big strong day down here on Tuesday last week, but we've not had any real selling pressure. We had some resistance here. You can see those big spike highs on those candles here over the past 4 to 5 trading sessions. That means there's resistance in there. Every time we rallied up, somebody sold into it. Rallied up a little bit, somebody sold into it. Rallied up, people sold into it. Same thing here yesterday. With today, not the case. Pretty strong day all the way around. You had a little bit of an equilibrium day here yesterday. I wouldn't call that a doji specifically because it's not opening and closing at the same price, but maybe that's close enough for government work. That would be a bullish close here today. I'm not very long-term bullish here on sugar. I think production estimates around the world, the weather's been good here this year. We've got a lot of sugar pretty much everywhere, at least as far as I can tell anyway. If we do get a rally, expected to be capped right around that 1550, 1565 area, which is where you've got that 50-day moving average here in the March contract. Starting to hook its way up, hasn't flipped to the buy side here just yet. We get another strong move up here over the next day or two. Those averages should cross over and turn a little bit, at least a short-term bullish. Coffee market here, aggressively lower today, 6% lower, down 24.60. Biggest down day that we've had here in a while. Got to go all the way back to September 17th. We had a bigger down day then, down 33.25. I believe there's rumors going around that the tariffs are going to come off on coffee here a little bit. That's got the market kind of pulling back here in the last day, today specifically. did push up to had 3 days of strength: Friday, Monday, Tuesday this week. Yesterday we closed at the highest level. Well, since we had the contract high close on September 15th, but couldn't quite make new highs here today, and the threat that those tariffs might come off. Really high volume here today. Lots of selling pressure in coffee. Short-term averages are on the bullish side here for the moment, but they should shift to the bearish side. Stochastics pointing lower, and the MACD is starting to turn red here as well. High volume on a big down day. Yeah, I would expect a little bit more pressure ahead. Might get some support from that 50-day average here in the March coffee. That's at 371.62, but I don't think that's going to hold. We'll have to wait and see what happens from here on out. March cocoa weak again today. Another new contract low close there. 185 lower, 57.44 is where we finished. Short-term averages 5 and 10-day turned bearish here with yesterday's trade. Market looks very, very heavy here to my eye. I don't think there's a whole lot of bullish information out there. 50-day moving average held as resistance here when we tested it earlier, the first 3 trading days of the month. That held as resistance when we tested it here in September as well. Yeah, week closer for the cocoa market. It does look like it wants to keep going lower. Volume's been pretty high. We've had selling pressure here Tuesday and Wednesday of this week. Yeah, that tells me that maybe the market does want to keep going down. But yeah, very weak close there. I shouldn't say contract low when we go all the way back. These contracts go away. This is the lowest we've been here in about 2 years. November 24 is the last time we closed down here. Does not look very friendly. You know, when we zoom out and look at all this, we've been making lower lows, lower highs, lower lows, lower highs continually here over the past year or so. Expect that trend to continue. I don't know if we're going to revisit the October 24 low. That was all the way down around that 46.92 area, but market's kind of heading that way here at the moment. Flipping over to the metal markets. December gold here. Now that market's still open. Trades for about another 23 minutes or so here today. 42.04.80 is the last I show. That's up 88.50 here on the day. Market held, I mentioned that 38% retracement level. Market held 38% Fibonacci retracement from the lows that we had here late in July to the contract highs that we set here in October. Came down rather quickly and rather violently, but then went sideways for about 8 to 10 days before short-term averages crossed over the bullish side. Nice day up on Monday, $112 and change higher. Turnaround Tuesday, we were down about $5-6, but the buyers re-emerged here today. Best close that we've had here since we had the contract high close here on October 20th. I like gold market from the long side. I think it's going to push up and start setting new highs here again. Similar commentary here for silver. Pulled back rather quickly and rather violently here from the contract highs that we set here, 16th, 17th of October. But also held right around that 38% retracement mark here for the last 2 to 3 weeks. Short-term averages turned bullish last week, a week and a half ago here on Monday. Markets kind of went sideways here, but then you started to get good buying interest here Monday. We were up 217, up 43 and a half cents here yesterday, and today at this moment we're up another $2.63 and a half cents. Depending on where they settle it, this could be a new contract high close for silver. Volume's been pretty good here today. I like this market from the long side, at least. Yeah, I think we're going to continue going up. March copper 509 even. Here's the last I show. It's up about 2.5 cents here on the day. We were lower here earlier this morning when I sat down at those lower prices near today's lows, where we were, 502 and a half, 503. Short-term averages did make a little bit of a bearish crossover there, but today's trade activity is kind of taking that away. Might reemerge here tomorrow if we open up a little bit weaker. Copper's not nearly as bullish and not nearly as friendly as gold and silver are, but I think that 200-day moving average offers good support. It has over the last month or so. 50-day moving average is pointing toward higher prices here as well. And if we get the capital expenditures here over the next 6 to 12 months here in infrastructure and factories and plants being built, copper demand will increase in my estimation. So I kind of like this market here from the long side as well. But just be advised, their short-term averages are this close to flipping over toward back over to the bullish side here. U.S. dollar index today. 8.5 higher here. 99.40 is the last I show here for it. Short-term averages flipping bearish here today. Market's been trading lower for the last 4 days ever since we hit highs. Well, here last week, Wednesday. So a week on, we've been lower here ever since. Today we're up just a little bit. Short-term averages are bearish. This market has kind of been stuck, and it's a terrible chart because it's only actively traded for about the last 3 to 5 months of the life, so it doesn't look real good, but we've really kind of been in the trading range here between about $1 on the upside and about 95, 96 cents or so here on the downside. Don't think we're going to revisit those lows because I think the dollar is still king, but I don't think it's going to get too bullish here just yet. We got 500 or 200-day moving average resistance here at 99.48. It's kind of been keeping a lid on things here for the past week to 10 days. If we pull back lower, expect to trade back to the 50-day, which is at 98.21. Although those medium-term averages, 50 and 100, made a bullish crossover here back in the middle of October. That might offer some bullish support there if we do get a pullback to about 98 or so. Bond market, Treasury bonds, 117.20 is the last I showed. They're up 4 ticks here on the day. Been working their way higher. Nice spike low and kind of a hammer here on Monday, but we finished the day down 2. We were up 16 here yesterday, up a little bit here today, 4 higher. Short-term averages are coming crossing to the bullish side here with today's trade. We're back up above that 50-day moving average, which has held this pretty decent support here in the bond market. The estimate right now is that the Fed's going to lower rates again by a 1/4 point here in December. We'll have to see if the market still believes that here as we get closer to that Fed meeting date, but there won't be any meeting here in November. And the bond market's starting to turn its way back up, technically speaking. So are the 10-year notes. Big day up here yesterday. They were up 11.30 seconds. Today, well, they're sharply sideways, unchanged here at the moment at 113.01, right here at that 50-day moving average. That's at 113.01. That's a little bit of resistance here right now and has been for the last week and a half, 2 weeks or so. But if we can get back up above that, should get the 10-year notes pushing back higher. Short-term averages are turning bullish. Volume was fairly decent today, not huge, but not bad. And I would expect the market to try to work its way back up. Stock indexes here. This is the December S&P here. It's up 7 here at the moment. 78.75 is where we're at. Higher highs, higher lows today relative to yesterday, which is also relative to the higher highs, higher lows from Monday's trade. Stock index has jumped aggressively here over the weekend with the Sunday night open, pushing things right back up here again. Short-term averages are on the bearish side, but you can see the 5 and 10-day right now offering support below the market here, 68.34 and change, 68.21 and change. I do think the stock indexes want to head higher. The weakness, I think, was by the rumors sell the fact on all the earnings that have come out here in the last couple of weeks. Now that those are behind us, I think the stocks want to head back up. NASDAQ futures, well, they don't share that same kind of enthusiasm. They've kind of been stuck between the 5 and 10-day moving averages here all week. The 10 days there at that 25,672 mark. We're trading 25,644. The 5 days giving you support here, 25,482. That held from yesterday. Also, so far has held as today's low as well. NASDAQ might want to roll over a little bit. I don't know. It's that 50-day average is supported there and has been here for the past several months in the NASDAQ. Dow futures contract highs here today. They're up 385, 48, 415 in the Dow Jones Industrials. Those averages are flipping over to the buy side here with today's trade. And yeah, I like this market from the long side. The Dow certainly looks bullish, but this is the smallest basket out of all of the stock indexes. So remember, that's only, 30 companies in that basket here. Those 30 working their way higher here all week. Contract highs today. Dow looks like it wants to head up, and those short-term averages turning to the buy side kind of reinforces that here a little bit. Russell Index, broadest market out of all of these stock indexes here. Equilibrium day here yesterday, opening and closing almost at the same price, just 1 decimal, 1 tick apart. Here, that's an equilibrium day. We did get a directional push higher here today, but they're not closing that way, so wait for the next directional push outside of close, specifically outside of yesterday's range. That's 24.7150 on the high side, or 24.48. 80 here on the low side. We get a close above or below either one of those numbers. That should give us the next direction. Short-term averages turned bearish here last Monday, a week and a half ago, but the market did find decent support with that spike low here on Friday. Jumped higher initially on Monday, but has been stuck just trading both sides of the 50-day moving average since then. Flipping over to the energy markets here today. Crude oil down $2.63 here today. Closed up strong yesterday, up above that 50-day moving average. But then we've taken out all of the trade here that's happened since, got to go all the way back to October 22nd. This is not a bullish candle. Market looks very, very heavy. Short-term averages are on the buy side here still, but that's because we've kind of been sideways here for the last, well, 2 weeks or so, give or take a little bit. Big bearish day here today, pushing the market lower. I would expect it to revisit that 56 to 55 level here in short order. I just think there's a lot of crude literally floating out there in cargo tankers out in the oceans. There's a lot of product waiting to be delivered. A lot of it's sanctioned, but there's still a lot of product out there just waiting to find a home. Unleaded gas today, also a bearish engulfment, opened up higher than yesterday's close, but we're down 6.20 here today, 6.2 cents lower here, 188.47. Big bearish engulfment. This is not a bullish sign. Yeah, that tells me that RBOB unleaded gas market's kind of lost its momentum. At least trade back to the 50, the 100, and the 200-day moving averages here, which have really been sideways. Well, since the middle of October, basically. They have been, that will be our next support level. That's down to about 184 to 183 or so here on the support side. But I don't know, the way the market's been trading here lately, we've gone from these highs before. We were up at this level here in July, went down to new lows, got close again in September. Went down for new lows for the move. Now we've gone higher, back up to the high end of the trading range. I think we're going back down to the lower end of the trading range, at least in my estimation here. Same thing with diesel prices, dropping almost a dime today. Very large bearish engulfment on the heating oil chart here for January. 242.81 is the last I show. Nothing friendly there. 10-day moving average might give you a little bit of support here, but just like in RBOB, you know, we got up to the high end here in late in June, went right back down here again, did not set any new highs for the move, didn't really set new lows for the move either, until we set new lows here in October, and then we've subsequently gone back to set new highs for the move here now, yesterday and today. I do think that diesel prices want to work their way back lower here in my estimation. And finishing off today here with the January natural gas, it's a little 2.3 cents lower here, very much kind of a equilibrium day. It's kind of running out of steam. I don't know if you can see it on your screen there. We're right at that 200-day moving average. That's at 473.5. Right now we're 474.1. Up above it here just a little bit, but you had higher highs, higher lows here today. Bulls had a chance to push it up, couldn't do it. Bears had a chance to push it down, couldn't do it. We're kind of right back to where we started. So Tuesday's very bullish trade where we were up about 20.5 cents. That's still the operating or controlling bar there, at least in my estimation. And we are up at highs. We haven't seen these prices here since July 21st or so is the last time we were up at these price levels. That 200-day moving average, significant long-term resistance there. I don't know, winter's coming, and that might keep natural gas on the bullish side, but it's certainly running out of momentum here today. Appreciate you guys listening. If you like what I have to say here, remember to like, share, subscribe. We can use all the support that we can need. Tell everybody about it. And I look forward to talking to you here next week. If you have any questions, comments, markets that you want me to cover, please reach out. Let me know how I can help. Thanks for listening.